I will, okay, just 1 second. I will share the screen. Okay, so you can see my screen. Is it all okay? Okay, great. Okay. Just the topic we would like to talk today is about how to raise capital for restaurants for your expansion, how to make your restaurant business more attractive to investors, to buyers, what you need to pay attention to. And, I will just tell you the background because originally my background is more from investment banking side and from IT side, and I'll just tell you the stories. So how we met with Tawreed and how we came to get interested into the restaurant business. So um, um, the table of content for today will be the following. I'll just tell you briefly about myself, about my background. I'll talk about our family office from Abu Dhabi, so what we do and what is our interest, why we started learning more about restaurants. I think it's an interesting topic, where to look for investors for you, how to prepare for meetings with them, what you need to pay attention to. I'll show you examples of professional investment desks that I was preparing in the past that are actually working. The example that I'll show you, we raised 2.4 million for this project, and actually I was a managing director for some time. We'll discuss about business plan. Again, I'll show you a sample, how it looks like, what you need to pay attention to. We'll talk about deal structure, expansion for your businesses, for restaurants, for food and beverage business. And also we found an interesting information about government support, especially in this COVID pandemic era, that particularly Abu Dhabi government is supporting restaurant businesses, and this information could be also useful for you. So my background, I'm originally from St. Petersburg and studied economics there. Then from St. Petersburg moved to Germany, and I was for 7 years in Düsseldorf. Actually started my career with IT in sales, so was responsible for global business development with a company called SafeNet. It's one of the big producers of encryption and data security equipment. So we supplied the biggest companies like Visa, MasterCard, like Swift. And then from Germany, I moved to London and started my financial career there. I started with a big hedge fund, investment fund called Prosperity Capital. So we had about 5.6 billion US dollars under management. And actually my biggest client there was Norwegian Sovereign Wealth Fund. So it's Norges Investment Management. It's a fund of future generations for Norway. So we had a mandate about $260 million from them. Also graduated from MBA in Oxford Business School, and then was for several years with institutional sales for cash equity with a number of banks. Spent 7 years in private equity division of VTB. It's one of the largest Eastern European banks. So we did several IT deals and also did a rollout of Burger King in Eastern Europe. Actually, our team opened about 350 restaurants, and this is the first time really I came across food and beverage business. It was a big project, and we purchased a master franchise for Burger King for Eastern Europe from Burger King Germany. So then I moved from private equity to venture capital. So last 5 years I'm more in the venture capital, and in spring this year, so I moved to Abu Dhabi. And actually, I'm working with a family office, WeThrive Capital. I'll just tell you a couple of what we do and how we actually came to the restaurant businesses in UAE. WeThrive, we have a number of businesses. It's like a private company. We have construction business. We have Tawreed centers registration for labor, government services, and also some legal services. We're building digital platform. Also, we have like a venture capital fund that we invest in technology companies. But our founders, they would like to diversify. And we started to look at the restaurant business because actually we realized that it was quite hard times, and we thought it's a good opportunity to enter this business because valuations were low. And we met through a joint contact. We met Leo Komissarov, the founder of Tawreed. And, he suggested that as we have already experienced talking to the restaurants, to the owners, evaluating these businesses, it could be a good idea that we present to the community, present to you what we feel from the investor side, what we see, and how to make your story, how to make your business stronger for the sale and for discussion with investors. So let us maybe start with the first question, maybe which comes to your mind, and many people are asking about it, where to look for investors. Actually, there is no rocket science. I think the first thing from my experience, I would advise you as private entrepreneurs and as business owners, just brainstorm all relevant contexts from your phone book, people. And actually, maybe if you touched upon with somebody just very briefly, still it's okay. My experience is if you contact people and ask them for advice, about investments, maybe just invite to the coffee, it is perceived absolutely normal. And from my experience, like 70–80% would be happy, to talk to you and to share some experience. So start with your own context. I'm sure you can find some people who might be relevant. I think particularly in Abu Dhabi, in UAE, in Dubai, LinkedIn is a very powerful tool. And in LinkedIn, pretty much you can do the searches. You can search like private investors, you can search family offices. And I would also really recommend you, there is a program called LinkedIn Helper. It's a separate program. It's not part of LinkedIn. It's a very powerful tool. Actually, in this program, you can do very advanced searches. You can choose the city where you want to look for investors. You choose type of investor. You choose a lot of parameters. And this program allows you to scan all the LinkedIn with your parameters and do the target lists. And I think normally if you do the search, it could be 500 contacts, 600 contacts, maybe 1,000 contacts. And the conversion rate is really good. Actually, it's about 2%. So it means that the program allows you to contact maybe hundreds or thousands of people, and 2% of them are taking meetings. So out of 1,000 contacts, I think 20 meetings, it's really doable. It's really possible. So learn more about this program. There is a tutorial available on YouTube, and you can download it for free and with very minimum fee, you can start using it. Talk to your family, talk to your friends. I think also tell them that you are looking for potential investor, potential partner for your project. Also, they might know people who would help you. I think big portion where you can also start looking for investors. I think real estate agents. It's a good try, because normally, again, if they have some premium clientele who are buying, selling, maybe renting apartments for them, they might have some private investors who again might be interested in restaurants. Bankers, if you have access maybe to some VIP service or premium banking service, again, you can ask your banker, does he maybe know somebody who is interested in restaurants or some investors looking for new opportunities? In my experience, it also worked several times. I think Dubai and Abu Dhabi, they are very rich in terms of conferences, various conferences. And I think as we're talking about restaurants and private businesses, probably the best conferences would be family office forums. And in the past, I participated in London. There is organizer of conferences called Prestel. They're very good, and you can actually network and talk to investors, talk to the family offices, talk to the private investors. And I would really recommend you maybe to try 1 or 2 conferences. Just go there as a visitor and network and look for the contacts. Also, I think there are special consultants. Again, you can look in the LinkedIn. It's normally former bankers or maybe some advisors from Price Waterhouse or Ernst & Young or other big consulting firms. They're helping with looking for investors for your businesses. But I think you need to be careful in the respect. You need to check the reputation of the person. Definitely, you need to have some formal agreement describing your relationships. And also, definitely in this agreement, it should be non-exclusivity. So if you start working with some agent, under no circumstances sign any any exclusivity terms, because sometimes it could really harm your process, and you might have even some penalties if you find investor yourself and go without consultants. So that is the main channels. Really recommend you LinkedIn. I think it's a helper. It's a very good program, but also think about your contacts and some external contacts, and maybe visit a seminar. It's a very, very good approach. It's very simple, no rocket science, but they actually work. So we, as a WeThrive Capital, we run a number of meetings, and actually I was personally myself quite astonished that unfortunately the level of preparation for the meetings is very, very low. So, for example, the first advice that I really give you, very strong advice: know your financial figures, because we met probably with 12 restaurants. And you ask people, what is your revenue for last year? What is your net profit? People cannot really answer the simplest questions about their businesses. So if they do not know about their businesses, who else should know? So really look at your key figures. I think it makes a very negative, very bad impression when you don't know the basic numbers about your business. Second question, which is again very straightforward, but when you start talking to the restaurant owners, they do not exactly what they want. So there was some anecdote situations when we were in the meeting, and actually you ask the business owner, so how much capital you require? He or she answers, I do not know. You ask, why do you require the capital? What you want to do with they reply, we don't know yet. And surely be realistic about your expectations, because when we visited several restaurants, they wanted to do a complete sale of the restaurant with, let's say, multiple 5 times of their annual profit, or 20 times or 30 times. Just, it's not IT company. So also be realistic with your ask, because, in certain cases, it's also look very unprofessional, very unrealistic when people are asking very huge price, very huge multiplicator. Also, think exactly what you need capital for. Because the whole idea about raising the capital, that investor brings capital to your company, but you need to achieve certain targets, certain KPIs, and you need to have a very clear understanding how you're going to plan to spend this capital and what would be the outcome. Because again, if you don't know about it, how the investor should know? So it's your business, and you really need to be prepared about it. I think the next point about investment deck and business plan, actually, as I mentioned, we visited maybe 12 or 15 restaurants on the purpose of investment. None of them had any investment deck or any business plan actually they could share with us. So I would say, even if you have a very basic presentation and very basic business plan, that would differentiate you from dozens or hundreds of other owners who are not prepared for the meeting. And I would really recommend you to spend time, to spend effort, and actually prepare these documents. We'll talk later how to prepare it, because it is also a very good exercise for you. So you describe your business, you maybe answer internally some questions you don't know, and you plan for the development of the business. You must firstly answer yourself what you want and how you want to achieve it. In terms of sales process, I think it is also very important to understand what you're actually selling. What are the differentiators of your business? Is it some concept? Is it quality? Is it consistency? Is it brand? Is it location? Is it maybe the level of your operations? Is it resilience? So pretty much you need to know yourself what are the unique selling points of your restaurant. It is very, very important, because again, when we had meetings with restaurants, very often they don't understand what their strengths, and it looks very unprofessional and very, very bad when actually the owner of the restaurant doesn't know why his restaurant or why his business is good, and what are the main factors. I think I would also really advise you to maybe read some kind of industry websites or some reports about industry, because it makes very good impression when you talk to the owner of the restaurant and he knows what's happening with the industry, what are the current trends, what are the best practices, it increases your chances and also differentiates you professionally and present you as a professional in the industry. Because with some restaurants that we talk to, people really didn't have an idea what's happening, what are the trends. They were very, very local, just focused on their business, not knowing anything beyond their own business or beyond their area. So talking about factors, what is important? I'm just telling you from my experience, but I believe these factors are important for other investors that you might be talking to. Firstly, the first question that the investor will ask you, why are you selling your business? And you need to have a good answer for that, because tell an investor that, business is not performing well and I decided to quit because I'm tired, it's really not a good answer, because investor is expecting you being proactive. He expects the further growth of the business, and he expects that when he or she joins the business, it will be even stronger and brings more money, will bring the return to the business. Deal structure. I think it is very, very improbable in the current environment that you will be able to sell 100% of your business. I think what investors are expecting that you take some money for expansion, and this money, it's called, in the financial terminology, it's called cash in. So it means it's the money that you're going to spend for expansion, for the growth of the business. But I can tell you from other industries, from IT sector or from some other sectors, that normally when the owner even sells maybe big part or 90% of the business or 80% of the business, he or she are obliged to stay with this business maybe for a year or so and to do the takeover of the business. So I think cash in model is much more realistic and is much more working in the current environment than trying to sell your business completely. I think it's much more difficult challenge, much more difficult exercise. Again, you need to be confident and know your figures. Before meeting with investor, you should prepare financial figures, your revenue, your profit, maybe your breakdown by branches, how much you spend on food, what is your growth plans. It is very, very important. Without figures, it is not possible to get any good results. You must know your figures by heart about your business. Another concern for the investors is the team retention. For example, if you are selling big portion of the business, how to retain the team, because investors are concerned that if they're entering the business and the team will just leave, it will damage the business. They will lose time to finding the team, to checking if the team is working okay. I think for investor, very important that you realize how to retain the team and what is the motivation of the team. It is also very, very important. Valuation, I mentioned previously, be realistic. It is not IT company, it is not Google or Amazon. You cannot request 20 or 30 times of your profit, because, for example, if the business is currently making profit, let's say, I don't know, 1 million dirham or 2 million dirham, and you're requesting 5 times or 6 times, it means that investor would need to wait for 5-6 years before he or she will see sort of return on his investment and payback of his capital. So be realistic. I think for also from our experience, when we requested the audited financial results, it was maybe 1 out of 10 of the business owners who was capable of providing it. So even if you have maybe some local auditor or some local partner, it differentiates you very strongly if you have audited financial results, because normally people just present some figures and you have no idea how these figures were prepared. Are they real? So if you have audit, it gives you strong advantage. For us, it was also important to understand the owner experience, the owner history. So did you have entrepreneurial experience in the past? What is your education? Were your businesses successful if you had it in the past? So if the business owner is an experienced entrepreneur, there is a big chance that this business will also be successful and profitable. And maybe if you can prepare some references from your business partners or from your colleagues or from other investors, it would be very good. Because again, when we requested references from owners of the restaurant, was very low response. Almost nobody had them. Just, from our perspective, what investor is expecting? Investor is expecting maybe constant dividend stream from this business, but it is all about expansion. It is all about growing the business, because at the end of the day, investor maybe at certain time horizon, he wants to sell his stake or he wants to sell the restaurant. So it's not about just buying one place and sort of enjoying the dividend. It's all about growth. It's all about expansion. And I think if you can offer investor an idea how maybe you would plan to grow, or what is your strategy, what are the risks, that would be again very positively perceived, because very few owners understand how they're going to grow their business. Let's maybe talk briefly about let's talk briefly about investment deck. So investment deck, it's pretty much a presentation. In other words, it's a presentation of your business, and that you demonstrate to investor, that you share with investor. What are the main parts of the investment deck? Firstly, you start with a table of content. You just list what the presentation is about. In certain cases, maybe when you deal with international investors, you need to put a disclaimer about limitation of liability and limitations of the investments. Just check, in the internet you can find a number of disclaimers, but for some territories it's important. Then you start with executive summary. So you just put one page and you describe what your project is about. So very simply, it should be no more than 7 lines. You describe your project, you describe your business, your restaurant, what are you doing, and it is very important, because normally for example, if you send this investment deck, just imagine professional investors, they're receiving 3-4 projects per day. So if we imagine that it's about 300 or something working days, like in the year, so pretty much per year, they might receive up to 1,000 projects. So people who are reading the information about your projects, they're very limited in terms of time. So they don't have time to look for information, to to trying to understand what you wanted to say. It should be the first slide that exactly tells about your business, and then people either continue reading or they just stop reading. So that's very important. It should be like a harpoon, about your business, telling from the very first page what it is about and why it is so good. Definitely, you should put as the next slide advantages of your business, of your restaurant, why your company is better, what demands of the customers you satisfied, how lasting these advantages of your business. It is very, very important, and you must think about it and you must put it on paper. Your achievements and milestones. Pretty next slide, you need to present the history of your restaurant, what you've done, what you achieved, what were the milestones. Very, very important. Some summary of financial metrics is required. We'll talk next slide about your financial documents, but possibly it could be a summary of your profit and loss. So you just show, if it exists for several years, you just show the main metrics. In the current environment, I think delivery and logistics is very important. So what is your relationships with aggregators? What is your delivery radius? It is very, very critical, because it affects profit margin of the business, and logistics are super important, especially in this post-pandemic area. I would say business and development plan is really important, and we talk about it. I think normally it is prepared 3 to 5 years, what you want to achieve, where you want to be in 3 to 5 years. Team, and a separate slide is surely investment request and allocation. You must put very clearly what you want, what amount of capital you want to raise, what is your request, and how you're gonna spend this capital. What will be the achievements after you spend this capital? From my experience, it is much better to split your capital request into several stages. For example, if you say I want $300,000 or I want $1 million, you split it, let's say, maybe in 3 tranches, and each tranche is related to specific metrics, to specific KPIs that you're achieving. That allows investors to minimize the risks, and I think it disciplines all the parties. So, for example, you take maybe 100,000, you show the growth of customers, you show growth of sales, of profit, then you take another, let's say maybe 300,000. So tranches is a very good approach to, firstly, to prove the investor the seriousness of your approach, and secondly, it allows investor to minimize risk. And please do not forget, in the material you need to put the contact, because in some presentations that we received, there was no contact details at all, and so you are sitting in front of the deck, and maybe you are even interested, but you don't know who to contact. So the presentation is without any contact. So please put your contact details, or please put details of a prime contact for who investors could contact. Just give me a second. I will show you there how the presentation looked like, that where we raised about 2.4 million. It's quite lengthy, but I'll just give you. It's a fintech business. It's a digital bank for labor expatriates, for labor migrants. But just to give you an idea, the sort of the quality of the professional presentation. So it's a title page, table of content. That's what I'm mentioning to you. This starts with CEO CEO speech. Then it talks about the vision and mission of the business, and actually what business wants to achieve, and why why this business was created. I think very important, maybe not so much in restaurant business, but in a professional investment presentation, you talk what customer needs, what problems you solve with your project. So maybe it's less relevant for restaurant, but again, think maybe what demand, what pain you solve. Maybe you provide quality, affordable food in the remote part of the city. Maybe you provide exceptional quality, maybe fast delivery, but what problems of the customer your service, your business solves. It is also possible maybe to talk about market, and if you have this data about your market, about restaurant market in UAE, you can put some information. So describing target market if you can. If not, just leave it. So then the company talks about its services, it's about its businesses, so what it is exactly does. So it's always necessary to talk what your business exactly is about. Like, for example, here, competitive advantage, what differentiates the company. It's possible to obtain access to an account in 10 minutes. So none of the traditional banks would allow you to do that. Some information about licenses. Here it's what I mentioned to you, it's more like status quo. It is achievements. So pretty much you put achievements about your business, but in this technology business, they put exactly functionality, what was already implemented. There is a special big section about attraction of the customers. Again, if you have data, how you're attracting your customers, maybe you're using social media, maybe you use some outdoor advertising. But if you have information, for example, how much it costs for you to attract new customer, how sort of what the average check is. It is also, all these metrics are very useful information. You might share this with investor. So some dynamics of a customer growth. Okay, about marketing strategy, opinion leaders, customer attraction, team. So pretty much I was also part of this team. So you might put just maybe key players. You don't need to put all your chefs or all your waiters, but just put the key players, maybe yourself as a founder, maybe your financial director or your accountant, maybe your partner. Just put the key people who who are involved in your business. Investment offer. So just put exactly how much money you need, what is the valuation of your business, and what this money are planned to be spent on. And surely you need to put some context. So very, very important. Again, this presentation is more about technology company, more financial technology, but pretty much approach is the same. It doesn't matter if you talk about more traditional businesses or you talk about more technology, high tech. So pretty much there are certain sections that I mentioned to you, which needs to be, sort of covered. Yeah. Then let's talk about business plan. I think in the UAE sort of culture, in the UAE business environment, I think business plan is more called like a financial model. So pretty much what I would also advise you to do before you're sharing your financial metrics and your financial data, it's better to sign some non-disclosure agreement and maybe talk to your accountant. I think you can find a lot of non-disclosure NDA agreements in internet and just adjust it to your company. Normally the investment deck, the presentation is shared without any non-disclosure, but for business plan, for your financial figures, really it's better to sign a mutual non-disclosure agreement with your counterparty or with investor. Business plan start with some assumptions. So for example, what could be assumptions for restaurant? You put what is your capacity? You put how many clients you expect per day. You put assumption, what is the average check? So all these assumptions helps you to build this financial model, helps you to build this business plan. If relevant, you can put some market description, maybe the volume of the market, amount of players, you know, some relevant information you can find. In the statements, in ideal case, it should be three major financial papers. It should be profit and loss account of your business, it should be balance sheet, and it should be cash flow statement. Sometimes, you know, what I also prefer to do, I do separate sheets in Excel for overheads, for payroll, for variable costs. And if you're talking about launching a new branch or new business, you also need to put a separate sheet for the launch or startup costs, what it would cost you to open actually the business. So it may be some renovation costs or costs of bringing the gas or bringing some, you know, facility, whatever cost, but just to put the startup costs. I think in a more advanced way, and again, maybe talk to your accountant, or maybe you can just find like some person with financial background. Normally you can put some net present value, your internal rate of return, maybe payback period. There are a number of key ratios. You can also read on the internet about them, but it makes you very different, makes you very differentiates you from other people if you can put these numbers. Also for restaurants, maybe breakdown by branches is necessary, and breakdown by dining and delivery. I think your business plan should cover maybe your sort of current operations, but it should also have a forecast maybe for 3-5 years, how you're going to develop and what figures you present to investors. Just give me 1 second. I'll show you how the business plan for Zamzam looks like. So actually it's quite, it was quite complicated because it was mainly to do with remittance and with some, 1 second, I think it's opening. Yeah. So it's a quite, I'll make the bigger. It's a quite a detailed document, you know, talking about like the market, you know, how remittance market and how, you know, payment card market looks like in Eastern Europe. This model was prepared for UAE. A separate description of the remittance market, exactly amount of clients, volume, different types of businesses, payment cards. Then we prepared summary, you know, so you can see here like P&L, you can see net profit, revenue by year. So it's quite detailed model, payroll, all the employees. And actually here the plan was prepared for 5 years. So you can maybe do 3 years, it's also fine, but it's somewhere between 3 to 5 years forecast. Overheads. So what are your monthly, annual overheads, quarterly basis? This was the cost of starting up actually the business, starting up the application. Maybe here it could be startup cost for your restaurant, how you plan to launch. Here the statements, that's what I mentioned. It's profit and loss account, it's cash flows, and it's balance sheet. But because it was a startup, so there was not pretty much a lot to put in the balance sheet, but anyway, so we prepared it. And again, the market. So that's how sort of professional financial model looks like. You know, I think I wouldn't expect that, you know, like the owner of restaurants prepared something that complicated, because your business nature is also more simple than this financial technology business. But again, you need to have some basic things in place. And when you have these basic things in place, maybe just start with P&L, you know, with balance sheet and with cash flow forecast. Again, it will differentiate you very positively, very strongly from the 90% of other business owners of other companies. Okay. So let's talk about deal structure. I mentioned previously, so there is a cash in deal and cash out deal. So cash in is when you put actually capital for the expansion of your business. Cash out when you pretty much want to sell the business, get the cash, and through a certain period of time to leave the business. My personal opinion that in the current environment, it's better to talk about cash in deal, that you take the money for development and for further growth of your business. In terms of valuation of the company, there are three main approaches in the financial theory. It's a discounted cash flows. When you bring pretty much through discounting, you bring future cash flows to the current period of time. It's multiples of similar businesses, and it's a book value. So pretty much book value is total assets minus total liabilities. That it is what it is about. I would suggest that probably more relevant is multiples of similar businesses. So maybe you can just check what are the prices of restaurants of similar businesses, and you can use similar multiples of profit or sales, and just use it. Just again, for you to understand, when you are selling an equity in your current company, you will get less ownership. It's normal because it's what called dilution. So pretty much your valuation of your company will be higher. So for example, if you raise 1 million, so there is a pre-money, so pre-investment valuation, and post-money. Post-money, you just add in the amount of investment that you get, but because the overall valuation of the business will be high, so surely your stake will be lower. So it's a normal process, and it's happening with any company raising the capital into equity, into equity capital. I saw also a model about profit sharing, like 5% royalty payment from revenue for 15 years. It is not sort of diluting you. You don't sell any ownership right, but pretty much it's profit sharing. So, but I haven't seen that often, but I know that it's existing. For the deal, again, it is very important that you prepare the key terms summary. So I would suggest that maybe you talk to some legal advisor that could help you with documents. In a big deals, there is preparation of share purchase document, maybe shareholder agreement. If you don't have it, you just need to prepare some key terms and agree with terms with investor. And again, just from all my experience, I think when you sell in a stake in your company, when you have a new investor, it's really like a marriage. And you need to think that it's a long-term relationships. And it's not only about getting the money to your company, but it is also about dealing with a person. So this person should be really, should be really professional and should be reasonable for you to deal with. Because if the person will be sabotaging your business or creating problems for your business, it's better maybe not to deal with this person and not to take money from him, because it's really long term. And ideally, the person should help you to develop the business with the capital, maybe with his contacts. But just think it's a very serious exercise, and in certain cases it's better not to take money than to take money, because you might find yourself in a very difficult situation after the deal, and you have a lot of problems of dealing with a new partner. So also look what person you are dealing with. I think normally when the deal is completed, you need to do changes in the company registry because you have a new partner. So I think from legal perspective, you need to do these changes in the shareholder registry so it reflects your deal. I would really recommend you to have some legal advisor, even if you do a basic deal, because it's a lot of various topics and a lot of things, and you need to be on the safe side. I think it's better not to go into some deal of selling the stake in your company without any legal advice. It might be very, very complicated. In terms of business expansion methods, again, I'm not sort of 100% maybe expert here, because I wasn't running myself a restaurant yet, because we just are considering some business model and we're considering some investment. But what I see from the market, that the story of dark kitchens is very popular. And if you have your established brand, you really need to find how you deliver your products to the customers, because again, my understanding is that aggregators are charging enormously high fees for the delivery, especially if there is a newcomers who wants to join them. And maybe you can consider your own delivery, but for your own delivery, you need to have the distribution of dark kitchen in order to deliver your food, your products to the customers in a reasonable timeline. The issue, I think, with these dark kitchens and this whole topics of own delivery, that it's a very thin profit margin. So I believe that the owners of dark kitchen, they are renting them out at very high prices, and pretty much setting up your own delivery, it's also not an easy exercise, because you will not have economy of scale, which big delivery companies have. So, but that's the trend that I see. And another trend is that if you have a successful restaurant, you might thinking about setting up like a franchise with your brand, and actually maybe even selling this franchise to other people, to other entrepreneurs. The challenge that I see here is selling your first franchise. When your partner, the person who is buying first franchise, will be successful, it's one story. If the person will not be successful, I think it could ruin the whole business of franchise. But I really believe that this development model through setting up your franchise and selling it to other entrepreneurs, to other investors, could be an interesting option to grow. And it is also what I see is happening at the market. Just a couple of words about government support. I think it's particularly available in Abu Dhabi. I'm not exactly sure about Dubai or maybe other Emirates. You just need to check with your own Emirate. But I saw that in Abu Dhabi there is this program Khadan 21, and actually they they cover part of the cost. They refund about 20% of the annual rental fees, which is quite impressive. And I believe already, I looked at statistics in May and June, I think about 220 applications were approved in Abu Dhabi. And pretty much this is targeted to support, small, medium-sized companies in this corona situation. And there were quite substantial amount of funds allocated, more than 1 billion dirhams to support the companies. So pretty much it's working. I think it's available in Abu Dhabi for restaurants, tourism, entertainment facilities. And I put here the website in Abu Dhabi. It's Khadan Abu Dhabi, /English/com. But I think Luda will share the presentation so you can check. If you're based in Abu Dhabi, I think you can definitely check the link and maybe apply. I think they're really proven and they're really helping the restaurants to the extent they can. So that's my contacts. Again, happy to share with it. If you have questions after the call, please feel free to contact me. I'll be happy to help you with advice. So I think Luda will also share it with you. I think that's it from my side. Would be happy to take your questions, and if anything is not clear, would be happy to sort of to answer them. Mm-hmm.
Thank you, Paul, very much. It's like checklist, so we can check everything step by step and come to investors after that. So we have one question in Q&A section. You see it from Arno George.
Mm-hmm. Okay.
Yeah, for sure. All materials I will send by email
yes.
for all participants.
Yes. Well, I think sure. I mean, you can definitely discuss with investor, even if your business, your restaurant is not profitable, but it should be very clear path how you're going to become profitable. So there should be very clear mechanisms, methods, what exactly you're going to do and what timeline it will take to become profitable. Because I think if you're not profitable at the moment, there are certain reasons. Maybe your costs are too high, or maybe the location is wrong, or maybe it's not enough of customers. Just the traffic where you're located is not enough. So I think, yeah, just you need to firstly do analysis why you're not profitable and what you're going to change to become profitable. But surely, we saw startups and we saw restaurants which are not profitable, and also they are raising money. But just do your homework and know exactly the reasons why you're not profitable, what you're going to do about it.
Any additional questions? Okay, so after the webinar, I will send all materials. Okay, Mohammed is raising his hand. Okay, one more question.
Hi, Paul.
Hello.
Hello.
Hi.
Hello, Mohammed. Hello. Hello.
How are you? Actually, I want to know what is a very commonly used valuation method for this cloud kitchens normally used here. What formula is used to evaluate the valuation of the cloud kitchens in the UAE?
I'm not exactly sure for cloud kitchens because we haven't ourselves spoken to them. But as I mentioned, there are three main methods. It's multiples, so you just pretty much look at similar business and you take certain multiple. It could be either multiple from profit or it could be multiple from revenue, and you just take the similar profit and evaluate your business. Or it could be, discounting cash flows. It's a DCF method. It's one of the most common methods in financial industry to evaluate any business. But I think DCF is more applicable to the already existing businesses. When you have already existing cash flows and you just bring the future cash flows to the current moment in time. And third one is a book value, but I do not really see it to be used often. I assume it's either multiples or it's discounted cash flows if the company is already existing, operating, and you can show some actual cash flows and actual financial results. For future businesses, it's definitely multiples because there is no any existing financial results.
Can I ask you one question?
Sure.
Like, what is the what in your experience? What is the more important? Is your financial metrics is more important? Team is more important? Now, and concept is more important for you. Means that, for example, if you am doing, for example, I have a cloud kitchen startup and we want to grow. I have some plans. So, and how I achieve, I already know that one, and I put it in the presentation also. So, what is more important for you to look into that things? So,
I would say the most important is the team. It's absolute number one. Because you even if your financial results may be positive at the moment, but still we're talking about some future cooperation, future development. So we really look at the team and we look what is the person like, what is his background, is he active, what is his ideas, does he know the industry. Secondly, after the founder, after the team, will look at financials, if they are available. In some cases they are not available. So, and third one is the concept, because I think concept is a little bit tricky thing, because concept could be changed, it could be altered. A certain concept, it might work in the current environment. Maybe 1 year or 2 years it is not working. Especially, I think if we talk more about fine dining places, there is also element of being fashionable. For example, the certain restaurants could be fashionable, and people are just willing to go and willing to spend their time and their money. But maybe 6 months later, this restaurant is not fashionable, not popular anymore. So I think team and financial results, if they're available, I think. But you are dealing with people, so if you have a trust, you have a belief in person, that's, I think, the most important, that he would be able to continue success or to develop a new concept and realize it successfully.
Yeah, I want to add one more thing in that presentation, that I think actually in this industry now, which is turning to more technological side, the restaurant industry. Like, people are only focusing. What I feel with my, because I working with Tawreed also, some of the community we have here also. So in that, what I found, that when people don't know actually about they told us that they don't know about numbers. What numbers they are having. How, for example, if I ask someone, okay, what is the cost of of your goods, what you're selling, for example, selling a 10 dirham anything, and what is the cost occurs, what's the cost of goods of that one. They don't know that one. Other thing, and then the control is they can build it through the technology. So
Yeah.
they actually, I will suggest people who is listening that we focus on technology, put the technology controls on the business. It automatically drives your financials, drive your future forecasting, your plans. It will help us. So this is my experience with the cloud kitchen, how we can do that one. We are doing, in this industry, there is very thin margins are there. And if you don't have
Absolutely.
control, you're always on a loss.
Absolutely. Mohammed, and if I'm allowed to ask, are you running the restaurant, or you're more like investing into restaurants, or you do both, or you do both?
From last year, I was running a cloud kitchen. I have a self-owned 7 brands. I have self-owned, and partners. I have running 9 brands of my partners, which is Kitopi is there. I was doing that one. So
very, very interesting.
So it is, we are doing that one for last 1 year. So we started in July, in operation. We start settling in July, and if we start operation in October. From that October, we are running that one successfully, alhamdulillah. So,
you mean Kitopi, you said, yeah? Or
Kitopi brands, Kitopi, there is partner, Kitopi's partners are there, they're brands.
It's a huge company that is running dark kitchens.
We are the master strategy partner for East Coast, because I'm based on East Coast, Fujairah. So we are running the full. We have a contract with them that way. All this region we will be really delivering their products. So on my kitchens, we do the last touch up of the product or the food, and then we can deliver to the aggregator. We are doing.
I think you are very right that you need to have at least basic order in your finance. Because many people who are coming to for the meetings, they're not prepared, and they don't know even what's happening with their business, what was last 6 months, what was last 12 months. And surely, if you have some IT technology which can improve your operations and improve your efficiency, maybe improve your profit margin, surely use it. And I think the finance should be at least in basic order, that you understand how much money you spend and how much money you earn. Otherwise, it's a problem. It's just the first step. You need to have basic order in your own home, on your own finances.
Yeah. So if it's allowed me later, so I will share my things to them. Might be I need a mentoring from your side, to I will some tweaks of my financial things and all, or document. So these sort of things. It will help me also if you can help us on that one also.
Sure, let's share the contacts after the call, and we can talk offline, after the seminar. So I think Luda has all the contacts. Yeah.
Sure. Thank you.
Thank you. Shukran. Yeah.
Thank you, Mohammed. Okay, so if you have additional questions, you can easily send it into community or in Tawreed.co or directly to Paul. So thank you all for joining. Thank you, Paul, for your presentation.
Thank you. Shukran.
Here we go.
Thank you.
Goodbye.
Goodbye.